Hey everyone, Stephen Gage here, founder of Vision Commercial Development. Today we're going to talk about a couple of ways how I would invest in commercial real estate if I only had $50,000 to start. Before we get too deep into this discussion, my first suggestion before putting your money anywhere would be to educate yourself. Make sure that you understand the market well. Nobody should put their money in a place that they don't fully understand. It's the easiest way to get burned. If you don't know where your money's going, if you don't have an understanding of the current local and global economy, and if you don't know how to calculate possible returns on an investment or the risk involved with it, don't invest. There are two suggestions that I would give for someone new looking to get started in commercial real estate with only $50,000. My first suggestion would be to consider doing a syndication where you pool your $50,000 with other small investors to have enough down payment to buy a larger project. Pooling your money with other people, whether that be friends, family, or other people interested in real estate investing, allows you to access better quality projects that you couldn't normally do alone, which usually allows for better returns. If you don't have people in your immediate network looking to invest into projects with you, I have occasionally used crowdfunding sites such as CrowdStreet or Realty Mogul to find projects to invest into with other investors outside of my own network of people. If you want a more in-depth explanation of what syndications are, check out my recent video where I explain it in very great detail. If you don't want to syndicate and want to run solo, my second suggestion would be to look on websites like Crexi or LoopNet and look for deals where you can place your $50,000 as a down payment. When you have only $50,000 to start with, you're probably looking at pretty small deals. Managing your properties can be extremely hard if they're too far away, so I would suggest looking at deals within a couple of hours' drive of where you live. Look for projects that allow for owner financing, so you can alleviate some of the upfront capital needed at the beginning. Personally, I don't run across owner finance deals very often, so I'd say just to keep your limitations in mind since you have only $50,000 to start with. Most banks in this market, assuming that you have good credit and income, will lend 70% LTV. So with your $50,000, you should be looking at projects in the range of $200,000 to $250,000. If you can find another bank or do an SBA loan with a higher LTV, you may be able to look upwards of $350,000. Depending on your market, this will likely be an older building, so keep in mind any deferred maintenance costs when evaluating the deal. You should be aware that your risk increases as you take on higher amounts of debt, so just be careful to understand all of this before diving in. With any type of investment, there are risks. The first and most obvious is risk in the market. Real estate markets fluctuate with general macroeconomic conditions, interest rates, and changes in consumer confidence, which affects property values, lease rates, and how easy or difficult it would be to sell your property. The second risk is that real estate is generally not a very liquid investment, so it could take a large amount of time to sell your properties. If you need access to your capital quickly, then I'd recommend not putting your money into commercial real estate. Most of the time, these are long-term investments for generational wealth, not 90-day flips. Depending on the deal, there could be credit risks. This occurs on both sides of the deal. When dealing with rental properties, you always run the risk that a tenant may not pay their rent on time, if at all. This can affect your cash flow, and if you have a mortgage on the property, you have to be prepared to pay that mortgage whether your tenants are paying or not. And then on the flip side, you also have to be careful how much debt you take out to purchase the property, and be confident in your ability to repay that debt, even if you lose a tenant or someone doesn't pay. With mortgages, you have a risk with interest rates. The cost of the money you borrow to buy a piece of property can vary significantly, and changes in rates can affect the profitability of a deal. It can also affect how long it takes you to sell a property, because if rates are high, it may take longer to find a buyer willing to purchase it. You can mitigate most risk with careful due diligence before buying and keeping money in reserve for anything that may come up with the property that you've invested into. However, we're talking about starting with $50,000 here, so the most important way to mitigate these risks with low working capital is to truly identify and research the opportunity so that you can make a calculated and sound investment. Back when I was just 18 years old and didn't have a dime to my name, I stumbled upon these two duplex lots in a quiet suburb of Wichita, Kansas, each priced at $15,000. Despite not having any money, I saw the potential in these lots. I thought maybe I could build some duplex buildings and make some rental income from the 4 units. So I put together an offering book and I went out to my friends and family, telling each of them about the opportunity and asking if they wanted to invest. We needed to raise $35,000 to buy the land and have $5,000 in reserves for taxes and other upfront costs. In return, we promised our investors a fixed 10% return on their money. Believe it or not, we actually found 3 people who were willing to invest in our venture. Less than a year later, someone came along and offered us $65,000 for the same 2 lots. It was too good to pass up, so we sold them. With that money, I was able to give back the initial investment to my investors, along with their share of the profits. While this was almost 30 years ago, it just goes to show that even if you don't have a lot of money to start with, you can still make deals happen. You just have to be patient, do research, and wait for the right opportunity to come along. And let me tell you, since then, I've done over 40 deals, built over 1,000 homes and 2 million square feet of commercial space. It's been quite the journey, let me tell you, but it's been incredibly rewarding. Every investment comes with challenges. Personally, when I started out, I learned that education and research are the most important things to determine how to properly overcome the hurdles that you will almost certainly face. When I bought those first lots that I just talked about, I wanted to build 4 units. I was naive and didn't quite realize how much more capital that would take, as well as the financing requirements. I didn't have any income, let alone enough to support a loan to build 4 homes. So I didn't have any choice but to sell the lots to someone else who did. When starting out, one of the many challenges most investors face is lack of capital. Capital constraints are a huge limiting factor when just getting started. Real estate deals can take a large amount of capital for down payments, for repairs, interest expense, and other costs. To overcome this, consider finding properties that may offer owner financing, or like I said earlier, create or join a syndication with other small investors. Another challenge you will face will be financing challenges. Securing loans to buy investment real estate can be very difficult for newcomers without a track record, especially if they're carrying personal debt as well. Make sure that your credit scores are good. Have a great business plan to present the banks with. Consider bringing on partners who can contribute funds, experience, or good credit to help sign on the loan. Anything you can do to make the banks feel more secure will help give you a better shot at getting the deal approved. Still to this day, with over 34 years of experience, good credit, income, and hundreds of millions of dollars of deals under my belt, I still do most of my projects with other investors and partners. It just makes sense to me, and it gives me a lot of joy working with other people towards a common goal. I always love to do projects where my investors can make money, I can make money, and we can do it all together. It brings me a lot of satisfaction and is a lot more enjoyable than doing it all alone. When I speak to new investors, they always want to hear about my greatest success story. I started out very blessed with a family who supported me and mentored me in the business of real estate. I was lucky enough when I was young to learn and be educated on creating my own syndications and have successfully put those together ever since. I've gone on to have a very successful career in the business, having built and sold hundreds of millions of dollars of real estate. I've gone on to have my own family who mean everything to me, and now we get to work together like I got to with my family when I was a young man. We have all gone through the difficult cycles in real estate and made it out the other side. There have been some really difficult times along the way, but those times are just opportunities to learn and do things better after that. I've had an incredibly blessed life, and I'm surrounded by people I love and have everything I've ever wanted because of the teachings, mentoring, and my own self-education and experience. Each project I worked on early was a stepping stone for me to get where I am today. My first large project is the one I'm most proud of. I was 28 years old living in Colorado. My close friend and I found a piece of land in Colorado Springs. We put together a syndication and raised over $1 million to buy a piece of raw land. We took that raw land through entitlements, platted it for 110 duplex units, and set out to put in all the infrastructure and build out all 110 homes. At age 28, I didn't have a huge income, but with our land as collateral and an introduction to a wonderful banker who became a very close friend that I did deals with for the next 15 years, I was able to get the loan to put the infrastructure in and start building homes. It was my first large project, and it took almost 10 years to get completed and built out. But every time I drive past the project, I'm filled with pride, both for what we accomplished at such young ages and also the homes that we built. I know that people are making memories in those homes, living their lives there, losing their loved ones there, and sharing holidays there. It makes me happy to think that we've been a part of all those people's lives, and I made many, many good friends in that process. Starting off with only $50,000 will limit the possible opportunities to start your portfolio. In this phase of your investment career, make sure you're looking at partners and have a strong team so they can support you to grow. Once you have a track record and some experience, you are more likely going to have an easier time getting financing for larger projects. So make sure you shop around at several different banks when looking for financing and get the best deal that you can. One thing that I learned earlier in my career that helped lead to me being able to grow my own portfolio is to make sure that you take advantage of the tax benefits that real estate provides. Make absolutely sure that you take advantage of things like depreciation, cost segregation studies, and 1031 exchange rules, where you can move from one property into another and defer capital gains taxes. One of the most frequently asked questions that I get is, what types of properties and opportunities do you see the most potential in for small investors? Personally, I like industrial flex warehouse space. It's what I've been focusing on the past few years, and it's an exciting space. The demand for warehouse space like this is booming, and I would guess that trend continues for many, many years. The spaces are generally more affordable to build and more affordable for tenants to lease than other types of spaces. And with the boom in people working for themselves, data centers, e-commerce businesses, and other small businesses, there's a nice demand for these spaces. I also like medical office buildings since the healthcare sector continues to be strong. With an aging population, I see demand continuing, especially in good areas around hospitals. These projects tend to require more capital though, so I'd save those for when you grow into larger size deals. With everything I've talked about to do, the most important thing to do before investing your hard-earned $50,000 is educating yourself and having patience. For every 50 deals I see, I do one of those because I'm thorough on reading and educating myself on each and every opportunity that I find. Make sure you've read books, watched YouTube videos and podcasts, joined real estate investment groups to network and learn from others, and learn the fundamentals of market analysis and financial modeling. Commercial real estate investing can be a lucrative way to invest your money if you educate yourself and are patient on finding the right opportunity to invest in. I've had a lot of fun building and investing into new projects, and I love doing it with a team of people that have the same motivation and aspirations that I do. If you're interested in commercial real estate investing and don't want to do it alone, our company, Vision Commercial Development, is always on the lookout for new investors who want to participate in groundbreaking projects. If you want to start working with the team today, head over to visioncommercialdevelopment.com and let's chat about new and fun investment opportunities that we could potentially work on together. Thanks for watching, and if you found this video helpful, don't forget to like, share, and subscribe for more insights into commercial real estate investing. See you next time.